The recent surge in interest from billionaire investors, including the renowned Warren Buffett, towards UnitedHealth stock is nothing short of intriguing. In the second quarter, Buffett's Berkshire Hathaway made headlines by acquiring a substantial stake valued at $1.6 billion in the struggling insurer, UnitedHealth. In a climate where value investors are grappling to uncover hidden gems amidst a stock market that seems unfazed by concerns over tariffs and a sluggish job market, Buffett's firm found an opportunity to capitalize on what many consider a significant dip in one of the year's most disappointing stocks. On Thursday, Berkshire Hathaway revealed through an SEC filing that it had purchased over 5 million shares of UnitedHealth Group during the second quarter, marking the beginning of a noteworthy investment. This stock has plummeted by 40% this year, making it the most underperforming stock in the Dow Jones Industrial Average, largely due to a series of unfortunate events, including disappointing earnings reports, escalating healthcare costs, a sudden change in leadership, and an ongoing investigation by the Department of Justice. Following the announcement of Buffett's investment, UnitedHealth stock experienced a remarkable 13% increase on Friday. Berkshire Hathaway is not alone in its bullish stance on UnitedHealth, which operates UnitedHealthcare, the largest health insurer in the United States, along with health services provider Optum. Other savvy investors have also taken notice. Hedge fund mogul David Tepper's Appaloosa Management acquired 2.3 million shares in the same quarter, while Lone Pine Capital, founded by billionaire Stephen Mandel, added 1.7 million shares to its portfolio. Additionally, quantitative hedge funds like Renaissance Technologies and Two Sigma have also established new positions in the company. Marshfield Associates, a Washington, D.C.-based firm managing $7.5 billion in assets, with a concentrated portfolio of just 17 stocks as of June 30th, also increased its stake in UnitedHealth by approximately 1 million shares during the second quarter, representing about 4% of its total assets. Elise Hoffman, co-portfolio manager at Marshfield, expressed optimism about UnitedHealth's future, stating, "We believe that most, if not all, of their current challenges are temporary. When we conduct a valuation that accounts for all the negative factors, we still arrive at a conclusion that appears quite favorable." In 2024, UnitedHealth reported impressive figures, generating $400 billion in revenue and $15 billion in net profit. However, the company has faced a barrage of negative headlines this year. In April, it fell short of expectations for its first quarter earnings and subsequently lowered its profit guidance for the year, resulting in a staggering 22% drop in stock value in just one day. The situation worsened on May 13th when CEO Andrew Whitty resigned, leading to the appointment of chairman and former CEO Stephen Hemsley, and the company suspended its annual forecast due to rising medical costs. Just 2 days later, a report from the Wall Street Journal revealed that the Justice Department is investigating UnitedHealth for potential criminal Medicare fraud, causing shares to plummet an additional 28% over the following 3 days. This turmoil followed the tragic murder of Brian Thompson, the CEO of its insurance division, last December, which highlighted growing public dissatisfaction with healthcare expenses. From its peak last November to its lowest point earlier this month, UnitedHealth saw a staggering 62% decline in value before beginning to recover. In a statement released on July 24th, UnitedHealth announced that it is cooperating with both criminal and civil inquiries from the Department of Justice regarding the Medicare investigation, asserting that it has full confidence in its practices and is committed to working cooperatively with the department. Investors are hopeful that the market overreacted to the news surrounding the investigation. Chris Niemajeski, managing principal and co-portfolio manager at Marshfield Associates, noted, "The healthcare sector has numerous instances of companies facing legal troubles and incurring hefty fines from the Justice Department. Yet most of the time, these issues do not lead to catastrophic long-term effects." Looking ahead, There are several positive trends on the horizon for insurers that could bolster UnitedHealth's earnings in the coming year. On April 7th, the Centers for Medicare and Medicaid Services announced an average reimbursement rate increase of 5.1% for Medicare Advantage plans offered by private insurers, providing much-needed relief to an industry grappling with rising costs for years. Hoffman and Nienseski do not anticipate severe sanctions from the Justice Department against UnitedHealth's Medicare program. Considering its position as the largest provider of Medicare Advantage in the nation and the potential disruption that penalties could cause to the healthcare system, essentially, UnitedHealth may be viewed as too significant to fail. Their role is to manage care effectively, and historically, they have excelled at this, and the government compensates them for this role in the Medicare Advantage sector. Hoffman explained, "We have no reason to doubt that they will return to their historically effective practices." This anticipated recovery seems to be undervalued by the market, which currently prices the stock at a mere 13 times earnings, even after the recent gains. This valuation is significantly lower than that of competitors such as Humana, Cigna, and CVS Health, which owns Aetna. Buffett's investment serves as a strong endorsement from someone with extensive knowledge of the insurance industry. Even if this stake represents only a small fraction of Berkshire's massive $344 billion cash reserve, the exact timing of when Berkshire and other investors acquired these shares during the quarter from April to June remains unclear, as investment firms are required to submit 13 F forms to the SEC detailing their U.S. stock holdings each quarter. This latest filing provides a snapshot of their portfolios as of June 30. Additionally, Berkshire's filing revealed new investments in home builders Lennar and D.R. Horton, as well as steel manufacturer Nucor. Interestingly, Buffett's firm sold 20 million of its 300 million shares in Apple during the quarter, although the tech giant continues to be Berkshire's largest holding, valued at $65 billion today.